Traders, in this video we're going to have a look at how to trade stop runs and retraces. We're looking for this alert to fire. It's called the extended. And there's quite a few on the 15-minute time frame. This is the alert we're looking for. What we're going to be doing is we're going to be trading it on the 15-minute, but we're looking for the entry point on either the 3 or the 5-minute. Bottom right, I'm going to bring in the 3-minute chart. Bottom left, I have the 5-minute. This signal fired twice. So let's have a look at both of these. I'm going to mark them up as a point of interest. So that's the first one, and this is the second one. 15-minute time frame. Now, essentially what we're doing, just to give you a little bit of context, is, and I'll open up the 15M, is we're looking for an opportunity to get long in a bullish market. Now, if you scroll out to the 4-hour, you're going to see that this is in fact a bullish market on the higher time frame. And what we're looking to do is we're looking to get involved on the rotation. There's another signal we could have a look at. Okay, so that's the strategy. It's a trend continuation. And we're looking for this opportunity to get long, in this case here. When the signal fires, we mark it up, as I've done here, with this line. So this is like a point of interest, so that we can drop down into the lower time frame and find where this is marked up on a 3-minute chart, for example. So let's check out these three signals. Oh, actually, before we do, the other checkbox that we need to tick is this. If a green signal fires, we need to come down here and have a look at these indicators, these two here. And we want to see that the bottom 3 bars on this indicator are the same color as the signal, and then we want to see this bar on the chart leading into the signal. All right, so this is telling us that we have a strong bullish bias and we're looking to buy. Okay, that's one thing. And look, the other thing I forgot to mention on this time frame that we need to look at is our candle colors. Notice the difference between our general standard colors and our indicators here. So what we want to see is, in a bullish trend, we want to see green candles turning red and then the signal. So green candles, they turn red, green, red, and signal. So in other words, green is bullish, the red is the retrace, and we're wanting that signal. We want that point on the chart. Okay, so 3 of these POIs that we can look at on the lower time frame. So I'll just go back out of here. We'll go down to, I've got the 5 and the 3-minute. I'm really interested in the 3-minute, but the 3-minute can tend to be a little bit busy with the signals. It's got a lot of volatility, and we get breaks quite often above and below, and you're going to find these signals fire a fair bit, right? So don't be distracted by that. Stick to the plan, because what we're looking for is our point of interest. I'm looking for this green up triangle next to the dot that fired on the 15, right? So that's the dot on the 15 back in here. We don't see the same dot on the 5-minute left, okay, or the 3-minute, but we get a 3-minute dot. We're not interested in the dots on the 3-minute or the 5-minute. We're interested in the dot on the 15-minute, and where that fired on the 15-minute, okay, we go down to the lower time frame and we look at that point of interest right there. So we know that this is our point of interest right at this point on the chart here. And what we need to see is these red candles shift into green, and we get this break here, shift in the structure right there, and we're going to be looking to take this on this up triangle on the 3-minute chart. And if you're a little bit nervous, you can wait for the second one. This is the break of market structure here. This is a shift in the trend, this one, a change in character. Change of character and break of structure. I'm going to be looking to most likely go with the first break, but there's a couple of things you can look out for here. If you're a little conservative, here's the thing. Come over here and we're going to switch on this. It's called pin bar pivots, and What this indicator does is it shows pivot points, but I've actually disabled them. What I've done is I've included fair value gaps instead. So if we open it up, these are the pivot points here, bull color, and you can see I've removed the opacity right down. I don't want them. No, we don't need these. What I'm interested in is the imbalances here, bullish imbalance, bearish imbalance, these shaded zones. I mean, you can color them if you like, green and red, but I'm okay just having this color, right? So what you want to do here is you want to flick this on. It's just going to help you identify imbalances, right? Mark them up if you like. An imbalance is where there's nothing left and right. It's a thin candle where it's moved with speed, and it's bullish in this case. It's one-way trading right there, so there's little to no bearish orders in the order book through this candle here. It's all bullish, so we get this imbalance, this gap. So you can mark that up. We've got another one down here as well. Okay, so that could be a point of interest. Okay, so we've got these two imbalances. I'll just take this off now. It's a little bit busy with that on, right? So we've just got the chart marked up. You're looking for the pullback into the imbalance. That's it. Simple as that. The other thing you can do is you can grab a Fibonacci, pull it from swing low to swing high, and we're looking for the move into at least see the red 50% here? So we're looking at this price swing. 50% of this price swing is my threshold, and you can place a buy limit order right there. Right, so watch this movement. You get the swing high, you got another red dot showing you the high there, swing low, and a limit buy could go in here. It's as simple as that. Buy. And you want to have a look and see what we've got on the indicator here. Just scrunch it up a little bit. See this yellow line? This is a previous daily high or low. One of the actually most important things that you need to look out for is where the signal on the 15-minute fires, you actually want to see it break down through either a yellow, orange or white line. So yellow's daily, orange is weekly, and the white is monthly. And there'll be hard lines like this or dotted lines. So you want that break. This is a stop run. Taken out. Sell stops under a previous institutional level. Your stop loss, I would suggest you go under this yellow line and maybe under the second imbalance or the first imbalance that you see here as this pushes off, right? Something like that. Go for a minimum of 2R, but have a look and see what we've got on the indicators, because most likely you might spot, maybe not in this case, but you will see it in other examples, either a yellow, orange or a white line running across the chart, in which case you would target them. Now you can target 2R by default, and this Fibonacci is another target you can use. I've got minus 50 here and I've got minus 100. So basically what this minus 50 is this price swing 50% pullback, A, B, C, D measured move. So that's a very valid target. And in this case, we get a 3R outcome. Now, this is up to you. You can go for broke with your target. There's a 5R potential outcome. And what we do in this case then is we follow price using the cloud. Okay, see these green dots? Well, you can place your stop loss under these green dots or red dots if it's bearish, and trail it with your stop loss. Absolutely. So these are your stop loss levels as price moves on. You can look to close when you see not this dot. You could take partial profits here, but on this one, that could be where you potentially close, because that signifies that it's a bit overextended here and we might get a deeper pullback, in which case we do. Now, depending on where your stop loss is, if that stop loss was here, in this case, you may have been lucky. And that continues on, and you get to trail it a bit further. Or you go out here. There'll be plenty of opportunities. Okay, so that's that point of interest, the first one. Now, we've got another one here. Now, here's the thing. See this one? We don't have the go-ahead to get involved. Okay, now, this is where the 3-minute chart comes into play, and it's really important. Let's have a look at this. See, this is the signal here. All right, let's have a look at that on the 3M. Okay, that's the signal right there on the 15M. But what we don't have is confirmation, this breakout. So while there's an absence of this green up triangle, we stay out of the market, guys. But what you can do with this is create an alert so you don't miss the opportunity. So we come over here to the trend channel on the 3-minute time frame, right? And we want this to make a lot of noise because we want to know when this triangle fires. We need to know ASAP. So we can come into the trend channel on the 3M, click the three dots, add an alert, and in this case I'm going to go cloud break 1. That's going to be the first alert that I want, and only once. Okay, I don't want it once per bar. Once per bar will make it a permanent, and it'll give you every alert. You don't want it, so you only want once. But I want it to make a bit of noise, so come over to notifications, play sound, show a pop-up, anything you like, right? That might be a little busy, but notify in app, that'll show up in your phone, if you've got your phone app on the phone, notifications, right? But you want that, play sound, and I'm going to make it create a bit of a ruckus, right? I want the alarm clock, 5 seconds, right? And then create, and that's done. There's the alerts and then there's the alert log. Let's just isolate this. So there it is there on the 5M, sorry, on the 3M, cloud break 1. That's the first cloud break, that's the one I want. And you can see the other alerts here. I'll delete it because this is a tutorial, but you'll be doing that in real time. Now don't forget to untick that. And the other thing is, these are not the alert log, okay? These are the alerts that you've set up. You need to make sure that I've been caught out a few times, okay? So you need to pull the alerts log up, and they're the alerts that are going off. All right, so the other point of interest was, just come up here and have a look at that. That's Wednesday the 26th at 2200, okay. Wednesday the 26th, 2200. All right, we'll go back there. Okay, Wednesday the 26th, this is it, 2200. Right, so our point of interest on the 15M, we could disregard the dots on the 3 minute, right? But we know that the dot fired here on the 15M. A very simple matter of running with this breakout, and it's starting to get away on us here, right? So that's going to happen. Yeah, just by default, go over here and mark up your imbalances. There's an imbalance that we need to be mindful of, and it definitely got away on us. You know, I've got another one here. Just close that. So the thing with this one now is you need to look at the price swings. Okay, swing high, swing low, swing high, and you're going to run with this signal here. It's got away on you here. You could run with that. You know, we don't know whether this is going to pull back down into here either, right down into this. In fact, I think we've got an imbalance down under here, that one. We don't know if it's going to pull back that far, right? So you need to make a choice. I tend to go with higher highs, higher lows, and go for the Fibonacci pullback. So we go low, swing high, something like that, and that would be an entry point here. And I would most likely go with a fairly wide stop on this one, thinking that it could pull back down in, you know. So you're going to be faced with situations where the market does pull away on you, okay, but there's a 50% pullback here on that swing. And I'm inclined to look at the chart on the 15-minute time frame, and we'll run with the information we have on that time frame. Okay, so let's just set that up and go back to the 15 I should say, because you're trading this on a 15M. Okay, here's some information. Yellow line, potential target, our entry point here. Stop loss, I mean, look, there's your imbalances. You could look at the imbalances on the 15M, and we've got one here. So you could tighten up your stop there. Your stop loss wants to be in the cloud if we break out of the cloud and follow these dots. So I'm inclined to probably pull my stop up, something like that, and that gives you a 2R, targeting this yellow line up here. Okay, what I've got here now is a checklist. You've got to stick to this, guys. Okay, alert on the 15M. We got it. Candles to show a retrace. Okay, this is a bullish trend, so you want to see the green bars turning red. Obviously, that's a retrace. This one here, it must break a previous HTF, a higher time frame level. Yellow dots and solid line here. Clearly, it's broken down into a previous higher time frame level. The solid higher time frame bar under here, this one must be the same color as the alert. The multi-time frame bars under, you want the last, well, the daily and the 4 hour to be the same color as the alert more than anything. So that's on the 15-minute chart. Okay, the 3 or the 5M, the triangle breakout with conviction, righto. Here's our first point of interest, our second point of interest on the 15M. We don't see an up triangle breakout, okay, so there's nothing to go by on this section here of the chart. Here we see the triangle breakout, so that's where we look to get involved. And what we're looking for is a move with some conviction, and we're looking for a candle where there's a space between the candle on the left and the candle on the right. That's the imbalance. Enter on the retrace into the imbalance. And we can use our indicator here to help us identify the imbalance. I'm going to turn it off again. That's on the 3-minute chart. Look at the imbalance on the 15-minute as well. Come back to the 15M. Just clear the drawings. Okay, see that? 15-minute time frame imbalance. It's the same one as the 3M. Then we enter long position, 50% pullback or in the imbalance. There it is, right there. Stop under the yellow line here, under the candles. Okay, keep it fairly tight. Go for minimum 2R, but you know, look at the chart and see what's marked up on there. And you know, there's a 6.45R there with that trade. Okay, make sure you follow the rules, guys, because there's going to be variations. These bottom bars down here won't match up, etc. If everything is ticked on the checkbox, we've got something to go with. And depending on how well you manage your trade here, that's a 12R. Look at that, 12R outcome. Now with a 12R outcome, you can afford to lose quite a few trades at 1R loss, okay? So I think keep an eye on the R factor. You know, if you have 2 or 3 fall over, that's say 2 or 3 R lost. But then, you know, you have one of these 5, 10R outcome and you're way ahead, right? So we'll be looking at these. And I mentioned earlier that I've really only been trading these triangle breakouts on the 15M. I used to trade these dots some time ago, and I shifted gears and went for these the triangle alerts, and I've been doing that for a while now. But I think it's time to come back to these signals because they are pretty good, and yeah, we'll be getting into that in the coming week. Now, just a heads up, if you're interested in VIP, it's going up and you want to jump on board before the price increase. Okay, it's Sunday today, right? This is the last day that this full package here, VIP, is going for $19.95. So you can lock that in with the PayPal subscription down here forever, for as long as you want to stay with that. So lock it in at $19.95 today, because tomorrow, Monday, there's going to be a price change. Okay, guys, so with that, that's our retrace trading tutorial. And love you to comment. Definitely leave a comment below. And with that, hope you have a great day. Safe trading, and we'll see you in the next one.